Hello everyone, how are you doing? Trust your day has been fine. If you are watching this recording in the evening, so I'm asking you, how has your day been? I hope your day has been fine. And if you're watching this recording very early in the morning, how was your night? And I hope you had a good night sleep. Okay, so as you can see to the upper left of my screen, we are going to be talking about demand and supply. This is video 20. So congratulations to you. You are almost done with the first phase of this course. All right. So you've watched 19 videos in total, this being 20. So congratulations in advance. So as you can see, this is video 20, and we are going to be talking about demand and supply in the market. Second thing we will be looking at is identifying demand and supply zones in the markets. And then lastly, we'll look at how to trade demand and supply zones in the market using Quasimodo pattern. Okay, so once again, we are going to be looking at demand and supply in the markets. So I'm going to be explaining to you what is demand, what is supply, and how to use them in a Forex chart. And then the second thing is identifying demand and supply zones in the market. So you can either say demand and supply zones or demand and supply area, which we are saying the same thing. Okay, and then lastly, how to trade demand and supply zones in the market using the Quasimodo pattern. That's it. So now, as you can see, I made a little illustration for you. Now, to the center of the screen, the up, you can see it written boldly, demand and supply. Now, I actually used some color combinations here. Demand means we're buying, right? Demand, that is green. Supply means it's coming down, that is red. Now, but then before we proceed, let us head over to Google. Let's head over to Google and then let's do a little bit of economics now. All right, now, if we type, okay, stay already, what is demand in economics? All right, what is demand in economics? Now, yeah, it says demand is an economic concept that relates to a consumer's desire to purchase goods and services and willingness to pay a specific price for them. So once again, demand is an economic concept that relates to a consumer's desire to purchase goods and services and willingness to pay a specific price for them. So now this opens our mind or our understanding. This gives us more understanding now that demand is an economic concept that relates to consumers' desire. So now a consumer's desire to purchase goods and services. So if I see a particular stuff I like, maybe I want to buy, let's say, for example, now a particular commodity. Now, if I want to buy that particular commodity, I'm having demand for it. Like I want to get it. Right. So and let's say I want to get it. I then told some of my friends also, and they feel it's nice to get it. Now we all are gonna have a demand for this particular commodity. Now it is one thing to have a desire to buy it. It is one thing for us to have a desire to want to get it. It is another thing for us to be willing to pay. That's it. I can want something, I can want it, but I may not be willing to pay for it. See it now? That's it. A good example now would be uh, I love dogs. I love to have dogs like at home, like pet dogs and all. But now, in as much as I want it, there's a desire to want, like I want it, but I'm not willing to go and buy one. That is it now. I'm not willing to go and buy it. But now, for a demand to be complete, it has to what? There has to be a consumer's desire to purchase goods and services and willingness to pay a specific price for them. Now, the next part says an increase, I'm reading from here, an increase in the price of a good or service tends to decrease the quantity demanded. So now, if you remember when they were teaching us economics in secondary level, it says the higher the price, the lower the quantity demanded. Do you remember that? And the lower the price, the higher the quantity demanded. So if the price is high, there will be less demand for it. If the price is low, there will be like more demand for that particular commodity. That's it. So demand means when the price is low, more people will want to buy it because price is at a discount level. Now, the last call you had, the last recording you watched of video 19, I talked about Fib, right? I explained to you the Fibonacci discount areas and premium areas. Now, when we talk about demand, if you want to buy a particular commodity now or a particular currency pair, you want to buy at discount. So you want to wait for price to come down. Okay. And in as much as you're doing that also, more people are also going to be looking at that area to buy because now the price has come down. So the lower the price, the higher the quantity demanded. And just like how price is going to go up, I will not be interested in buying a particular currency pair anymore because price has increased in value. So the higher the price, the lower the quantity demanded. Right. And then when you go, if we are to type now, what is supply in economics? Let's bring that also. So now we can see here, it says yes, supply is a fundamental economic concept that describes the total amount of a specific good and services that is available to consumers. Now, according to the law of supply that we learned in school, is that the higher the price, the higher the quantity supplied, and then the lower the price, the lower the quantity supplied. Okay, so now if the price is high, there's going to be more sellers willing to sell because price is high. So if we take this to the account to the financial market now, I'm only going to be selling a currency pair when the price is high. That is the lower low. And then when price is going to create a lower high, price is going to be increasing in value. So I'm only going to be selling, and you see how I'm bringing it all together now. In a bearish market, we own the best place to sell is at a lower high. That is you saying the higher the quantity, the higher the price, the higher the quantity supplied. So more sellers are going to be willing to sell at a higher price. When you bring that now to the financial market, I'm only interested in buying at the lower high. Because for price to move from lower low to lower high, definitely price has increased in value. That's it. Price has increased in value. Therefore, I'm going to be looking to take a sell on that particular currency pair. So that is it. Demand and supply. Just like how you know it in how, like what you've learned, that is how it is also. Just a different way of applying it when it comes to the financial markets. So thank you, Google, for that. Now, coming back um to the chart. Now, as you can see, I made two illustrations, one to the left and one to the right. Now, I've been able to explain to you what demand is and what supply is, right? Just remember the law of demand and the law of supply. The law of demand states the higher the quantity, the higher the price, the lower the quantity demanded. So if price is high, there will be less people willing to buy. Think of it at price, think of it as price creating higher low, and then price creates a higher high. This price has increased. So the higher the price, there will be few people looking to buy this because people only love to buy at discount. So if price start to come down now, that is price reducing. That takes us again to the law of demand. The lower the price, as Euro USD is reducing, more people are going to be looking to buy. So the lower the price, the higher the quantity demanded, meaning more people will be willing to buy. And then when we come to supply, it says the higher the price, the higher the quantity supplied. Okay, that's it. The higher the price, the higher the quantity supplied. Now, if price is high, that is the best time I want to sell because I like to get in at the premium area. I've taught you that also in the previous call in Fibonacci. So when we say discount and when we say premium, that is what I mean, right? So applying the law of demand, the higher the price, the lower the quantity demanded, and then the higher the price, the higher the quantity supplied. Okay, just the basic law of demand and supply. That's what we're also going to be using in this training today. Now, identifying demand and supply zones in the market. How do you identify a demand and supply zone in the market? Now, the first part of this call, which I've talked about already, using the law of demand and supply, is that if price is high, there will be less people willing to buy it. And then if price is high, there will be more people willing to sell. Now, that is one aspect now. Now, the second way we can look at demand and we can also look at supply is that a demand means more people are buying. That's it, right? More people are buying. That is demand. And supply simply means more people are selling. You know what? Let's have all of um this thing here. So I'm just gonna change this quickly. Okay, let's use maybe this and then change this to 16. Exactly. So the law of demand states that the higher the price, the lower, right? The lower the quantity demanded, and the lower the price, the higher quantity demanded. That's it, definitely. So the higher the price, the law of demand states that the higher the price, the lower the quantity demanded, and the lower the price, the higher the quantity demanded. And then for supply, now it's just going to be the opposite. The higher the supply, okay, that's going to be the law. We're going to have supply down here. So the law of demand, this is just going to change to the law of supply. Okay, states that the higher the price, the higher, okay, the higher the price, the higher the quantity supplied. Okay, and the lower the price, the lower. Okay, the lower the price, the lower the quantity supplied. That's it. This is the basic law of demand and supply. So now the other way to look at demand and supply, now we start. For example, now, like I said, demand simply means an area where we have more buyers. Okay, that means when you hear the word demand, what comes to your mind is more buyers, right? So demand means more buyers. That's it. That's what demand means. So demand means more buyers. And then if demand means more buyers, definitely supply will mean what? Supply means more sellers. That's it. So demand means more buyers, supply means more sellers. So now identifying demand and supply zones in the market. From when we say there are more buyers in the market, now coming from a financial, from like I'm talk with respect to the financial market now, when we say more buyers, how do you spot more buyers in the market? How do you do that? How do you spot that, okay, there is a lot of buyers in the market here? You can only do that by looking at the candles and looking at how price is rejecting at a particular area. Now, I drew this illustration here now to show you this. Now, take a look at this now. Price sold all the way to the downside here. Okay, and then price came to this area, and then we saw price reject, and then price went to the upside. Now price sold down again, price came back to that same area, and then price what? Went all the way to the upside again. Now this is, if I see this, this is giving me a signal that there is a demand in this area. There is a demand for price to go up anytime price comes down to this area. Are you seeing it now? Now, this really has nothing to do with higher the price, the lower the quantity demanded. This is another aspect, another way to look at demand and supply. So now price came down, price went all the way to the upside. Price came back down to that same area, price went all the way to the upside again. Now price came back there again. Can you see? And then price went all the way to the upside again. Now this area means that there is a demand for price to go to the upside. Now, demand and supply is so important that this is what majority of the big institutions even use to trade. And this is what they use to trade, demand supply areas. That is why it is a very, very strong strategy. If used correctly, will give you big wins on your trade. I know we trade smart money concept, and I know among the checklists, out of the whole checklist, there is no demand and supply. But in as much as demand and supply is not among my checklist, I always make sure that majority of the time when doing my analysis, I'm always looking out for this area. And I'm going to show you some examples of some of my chart markups. Okay, now this area simply means that there is a demand for Euro USD to go up. Like investors, people are looking at this same level anytime EU gets to this area and then it's going up. Same thing happens for any other currency. It could be Bitcoin. It could be a commodity you want to trade. It could be, anything. But when you start to see that in this area, price go up, it comes back to that area, goes up, comes back to that area, that area simply means there is demand for price to go up in that area. And people can use this as a strategy that if price come back there, because I have seen, remember technical analysis, study of what has happened in the past to predict what is going to happen in the future. So if I have seen that price is going to come, price reject from here, reject from here, reject from here, and then price sold down. Okay, let's say before price sold down now, I could be thinking that, okay, if price come back the fourth time, I'm going to take a buy because I've already seen it reject 3 times. And now price came back there the fourth time, but what happened? It didn't hold. It just went through. So if you were buying now, most likely you would have taken a loss. That is why I do not trade demand supply just like that. I just add it as an additional confirmation to my smart money checklist. Okay, so now, as you can see, this area is a strong level of demand. So demand means more buyers. It is an area where you see buyers in the market. And how do you see buyers in the market? Seeing bullish candle printing anytime it comes to this area. Price come to this area, we see price reject to the upside. Comes back to that same area, price went to the upside. Price came back to that area, price went to the upside. That area generally is an area of demand. And how do you use this now? How do you trade demand? Going to number 3, how to trade demand and supply zones. Now, how do you trade a demand and supply zone? Very, very simple. Now, since I have seen that this is a demand area, I can project it to the future maybe in a situation where now I have what? Lower low, lower high, lower low, lower high, lower low, and then price broke what? And then price broke my structure here. And now we have what? Higher high, higher low, higher high. Now I want to sell at where? I want to buy, rather, I want to buy at the higher low. So I have my trend. Okay, the next thing is what? The range. I have my down range. I have my top range. Next thing is what? The fib. I measure the fib from the swing low to the swing high. I want to buy anywhere 50% and below. Okay, now after the fib is what? The liquidity. Do you see the liquidity? Maybe there's an equal high or something where you want to place your targets. And then after the liquidity is what? The institutional candle, which is any of the three I've taught you, imbalance and all. So if you see an imbalance in this area, makes more sense. Now, the sixth checklist, which I did not had rather, but is there, is you looking out for demand and supply areas. Now, remember this same level where price held in the past as a demand level. Now, if I draw it and project it all the way to the future, it is lining up with my what? Checklist. So now this is how I trade demand. I'm going to wait for price to come back to that area, and I would be expecting some kind of rejection to the upside because this area was an area of demand in the past. And investors could be looking at that structure level, that demand supply level to get in on trades to go up. And now we are not even taking this trade based on only demand and supply. Remember, all our five checklist aligns. We are just adding demand and supply to it. Amazing. So this is how I trade using the demand and supply. That's it. As you can see, price broke. Price came back to this area. We had some supply here and then came down and then came all the way up again, gave us the supply here and then came down and then broke out and then came back down to that structure level. So there is a structure. This area is a very structure level, right? It's a very strong structure level where we have demand and supply playing out. So investors, big traders are looking at this area to get in on trade because again, they look at what has happened in the past. If this was a strong level of demand in the past, it could be a strong level of demand presently as prices coming down to that area. So investors will be looking at that area to buy. Therefore, me, a smart money trader, it is aligning with all of my checklists. It is at the discount level. I want to buy. Remember, the lower the price, the higher the quantity demanded. So if the price is dropping now, more people are going to want to buy. So if more buyers want to buy, what do you think is going to be the best place for more buyers to buy? More buyers are going to buy at an area where there was previous more buyers. You catching it now? More buyers will want to buy at an area where there were previous more buyers in the past, which is in this area. There are more buyers here in the past. And I'll come into the future, many of us are going to be looking to buy in this area that really understand how the market works. Big institutions are going to be looking to buy in this area because this is a strong area of demand. Are you catching it now? That's it. So this is how to trade a demand and supply zone in the market. Demand, rather, I'm going to show you for supply. But basically, it's the same thing. Okay, that's it. So more buyers are going to buy at an area where we have more buyers. More buyers, let us put that into writing. Okay, when trading, okay, demand areas in the market, it is important to know that it is important to know that more buyers are going to be looking to buy at an area where there has been an evidence of more buys in the past. That's it. This is it. So let's just break it down. Okay, that's it. So when trading demand areas in the market, it is important to know that more buyers. Now, the more buyers means those that want to buy now. Okay, they are going to be looking to buy at an area where there has been an evidence of more buyers in the past. Where is that evidence? This is it. There was demand in this area. Yeah. Now projecting into the future, we can also predict that price reject from there. And higher high, higher low, higher high. So you see there's a lot of stuff that is going on that higher low. But you can agree with me when I taught you market structure, higher high and higher low. You didn't even know all of these things were involved with the higher low. You just thought, okay, I'm just going to buy the higher low, right? Definitely. That's why I told it is a journey. Yes. So this is it. This is how to trade a demand zone in the market. And now when I say using Quasimodo pattern is just simply this. This is it. This is Quasimodo pattern here. Looking at the previous demand area and then projecting it to the future, then to buy from there. That's Quasimodo pattern. So now let's come to supply in this area now. Supply, we say the law of supply states that the higher the price, the higher the quantity supplied. And the lower the price, the lower the quantity supplied. If price is at a lower low, there will be less sellers willing to sell the market because people will not want to sell when price, will not want to sell the price when it's low already. You want to sell when it's high. Think yourself as an entrepreneur now or a business person. Let's say you have a product you are selling. Now, wouldn't you want to sell when the price is high? Wouldn't you want to sell, for example, the price of the commodity now? Let's say the price of what you're selling is $100, and all of a sudden the price of that other seller started to take it up, and then the price of what you're selling increased to $500. You will be happy selling at a higher price. Why? Because you are going to gain more as a seller. That's it. The same thing in the market. You don't want to buy the lower low. Wait for price to pull back up. Wait for that price to increase. And then you take the sell. If you take the sell when it's high, you will make more money. You will make more pips, rather. So I will not say you will make more money. Yes, you will make more money. Yes, definitely you will make more money depending on number one, depend on your account size. So I wouldn't say you will make more money than the other person, right? Because it all depends on their account size. Like somebody with $100,000 account can risk 1,000, and it could make like 5 pips, 10 pips, 20 pips, and make about $300 to $400. And then you now that have $100 account, even though you make 20 pips, you might not still be able to reach that $500. So it depends on account size, but you will make more money if you sell when the price is high. So bringing it out to the financial market now, supply means more sellers. So we're going to be looking at that area where we had previous sellers in the market. So how do you do that? You go to the past, take your chart to the left, try to draw that area where you saw that there was more sellers in the market. And a very good example will be this area. We saw price in this area, came up, people took it down, and then came up again to this area, sellers took it down. And then in this area, sellers took it down. This is evidence that there is a selling pressure every time price comes to this area. And then eventually price broke it, continued the uptrend, and then broke structure to the downside, and then price started to sell. As price is going back now to create the lower high, I would be looking at this area for a sell. Why? Because there is previous selling pressure in that area where price is approaching. So I wouldn't be surprised if I see price go up here and just dump. I would not be surprised because it has happened in the past. Okay, so now we have to bring this here now, clone, and just do this now. We can say when trading supply areas, okay, when trading supply areas in the market, it is important to know that more sellers are going to be looking to sell at an area where there has been an evidence. It has to be clear. You need to see it, evidence of more sellers in the market. That's it. That's how to trade a demand and supply zone in the market. That's how I use it. It's a very, very good additional confluence you can add to your trade checklist that would help you increase your winning rates. That's it. So this is how I trade demand and supply. This is how I trade demand and supply. This is how I trade demand and supply in the market in addition to my trading checklists. Exactly. So now let me take a quick screenshot. Oh, uh, sellers in the market. So quickly, let me just let's remove all of this so we can have a very clean all right, now I'm done. So I'm just gonna take a quick screenshot. All right, from here, perfect. So all the way to this area here. Exactly. So I'm just gonna take the screenshot now. That's it. So now let us go to examples. Okay, so you can see I have this tabs opened, 1, 2, 3, 4, 5, 6. Okay, so I have to quickly go through my trading journal, and so I can bring out some of my markups where I have demand and supply added to my trading trade idea. And the first one is, this is Euro JPY. These are recent. Okay, this is recent. This is April 3rd. I'm making this recording, like I recorded this call April 11th. That's about 8 days ago. So this is Euro JPY, as you can see. Euro JPY, August 3rd, 10 a.m. in the morning. So I actually saw this before it played out. So now let's go to Euro JPY. Okay, I'm just going to head over to Euro JPY. That is for the Euro JPY. Okay, so now Euro JPY, and let us go to, this is on the 1 hour time frame, right? Euro JPY on 1 hour time frame. Now, look at this. Did you see it? Now, what can you see? This is an area of demand, right? See, price came there, went all the way to the upside. Price came to this area also, give us some kind of rejection to the upside, right? And then came here, give us some kind of supply, came here, supply. But because we have this area of demand and we have this area of demand, and looking at the big response price gave in this area, I projected it to the future, and I was anticipating that if price should come down to this demand area, this area here, price is going to buy up. Now, aside from that, I added what institutional candle. This is an imbalance where I'm expecting price to go to the upside. So my checklist, everything is there. My liquidity, I'm expecting price to take out this liquidity and this liquidity. This is where my entry is going to be. This is the 1 hour time frame, 10 a.m. in the morning, August 3rd. I saw it before it play out. Look at this now. Look at 10 a.m. in the morning. Where is 10 a.m.? This is 10 a.m. August 3rd. See, just look down, you will see 10 a.m. So this is before price got there. Look at what price did. Price came down to that area. Are you surprised seeing how price went all the way to the upside from this area? Very precise, like how I saw it. I wanted price to reject from here, come into the imbalance and give us a possible move to the upside. Price came there, and what we had the move to the upside. Price took out the liquidity, and price took out the second liquidity. Very amazing trade. A 1 to 12 risk to reward. I've taught you risk to reward. Whatever you're risking, you made 12 times more. It's risk $100, made 1,200 overall move. So can you see, I was taking this trade based on smart money concept, but now I added what? Demand and supply as an additional confluence. Now, I didn't even take this trade based off um, this demand and supply. Why? Because the stop loss was too big. So what do you think I did? I waited for price to come to that area. Price came into the demand supply area, and look at what happened when price came there. Let me show you. Price gave, now going to the 30-minute now, I scale down to the 30 minutes. What can you observe here? Price is coming in a bearish form, lower low, lower high, lower low. And the price is what? Price breaks structure to the upside. So now that price has broken structure to the upside, I wanted price to come down to where? Can you see this? Imbalance. Yeah. Institutional candle in form of an imbalance. Are you seeing it now? I've taught you all of these things now. Now this is live application. So I wanted price to come all the way to the downside, come into the imbalance, feel me, and then give a rejection to the upside. And look at what happened. Boom. Price activated, and look at this. Then all you have to do next is just wait. Just wait. Can you see? Price has taken out this liquidity. We have this one left, this one up here. And boom, there we go. Price is taking out the liquidity to the upside. So you see, this is how to trade using the demand and supply. So this is me, this is how I use it. I make sure I'm using it in accordance with what my smart money checklist. So that's for Euro JPY. Next one is Euro USD on the 4 hours, August 7, 2023, 2020. That's the time. So August 7, that's just a few days ago. Right now, this is Euro USD on the 4 hours. What can you see? We had what in this area? Supply. We had what in this area? Supply. That same area drawing it to the front, we had some supply. Now drawing it to the front more, we had what? Demand. Price came there, went all the way to the upside. Came back there, went all the way to the upside. So I can predict that if price come back there, it will go to the upside. And I discussed this entry on the weekly outlook. Yeah, I remember telling you guys, I want a price to come down into the imbalance, and the price should reject to the upside from there. Lines up with what? Demand and supply. Look at this demand, this demand. There is evidence that there is buyers in this area. There is buying pressure in this area in the past. Therefore, I can predict that price is going to reject from there in the future. Now, let's head over to Euro USD. Quickly, just come to the Euro USD. Now, we go to the 4 hour. Okay, a lot of price action has happened, but then look at it. This is that area, right? Where is the demand and supply in this area? I can see demand, demand, and demand in this area, right? Look at this, projecting it all the way to the past. I can see we had some supply, 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 demand, demand, demand. And this area was where I was looking to take a buy to the upside. Price came there, and then we had what? Price rejected all the way to the upside. There was an entry on the 2 minutes, which we took. Look at this. I'm going to show you the entry on the 2 minutes. Right, it was a 2-minute entry. Let's go down to the 2 minutes and look at it. Very, very precise. Price came into that demand supply area. Remember, this gray area is the demand supply area. Look at the response. Look at what happened next. What can you see in that area? Market structure again. Lower low, lower high, lower low. Price broke the structure. You can see I have my breaker structure here. Creates the higher high. I have the stop range here. Remember, everything I have taught you, we have the down range here. Then I draw my feed from the swing low to the swing high. Okay, from the swing low to the swing high, from the swing low all the way to the swing high. I am looking to take a buy at discount. Okay, I want to buy at discount, and discount is 50% and below. So I'm going to wait for price to pull back down. Now, inside that discount area, institutional candle, what type of institutional candle am I looking for? I can look for an imbalance. Do I have an imbalance here? Yes, I have an imbalance. Can you see this imbalance? Are you surprised seeing how price came back there and the price rejected and went all the way to the upside? Really precise. And this is a 2-minute entry. This is a 3 pip stop loss trade. 3 pip, and look at how far price went. This gave a 1 to 14 risk to reward. So if you were risking 10, you made 140. If you were risking 100, you made 1,400 on this trade. Very, very precise. Demand and supply are very effective when you have a small money concept. So that is it for Euro USD. And then the next one is AUD NZD on the 13 minutes time frame. AUD NZD. That is Australian dollar, New Zealand dollar on the 13 minutes time frame. Okay, now let's look at it again. Now, why did I want to take this? Why am I looking at this area? First, I see the liquidity I want to capture. Structure is bearish to the downside. I have my range. Now I saw what this is a demand level. This is a demand level. This is a demand level. And then price came down. We had some little supply. We had this get price go up, rejected supply. We had demand. So this is a very strong level of demand and supply. Therefore, I projected it into the future. Now, I'm not trading only demand supply. What can you see here? There's an imbalance here I wanted to trade. And then the structure, demand supply happens to be inside that imbalance. That's a strong confirmation for me. And look at what happened. Look at it. Just look at the response. Look at how precise this sell was. Price came all the way to the upside, came into the imbalance, touched the demand and supply, boom, to the downside. And the price what? Sold hard to the downside. Hits my TP of 1 to 3. Cut. Very precise. Demand and supply. That's it. Let's look at the next one. The next one is card chef. Card chef on the 1 week time frame. Card chef on the 1 week time frame. So card chef on the 1 week time frame. Card chef on a 1 week time frame. I look at card chef now. Look at this. Very, very precise. We'll come back here now. What can we see? This is an area of demand. Right, price came back there. You see the rejection to the upside. Price came there. We had some sell in this area. And the price went all the way to the upside, then broke. So this is a strong level of demand and supply for me. Projected it into the future. We have an imbalance there also. So we have the liquidity, which I'm looking to capture. Now, presently now, when I'm doing this recording, price has not taken out this liquidity. But I can bet you I am 100% sure, because this is how the market works, that before you, on the day you are watching this recording, please go back to card chef and check. The liquidity will have been captured already. That's it. Look at that price came into the structure level, structure area, and then price what? Dumped to the downside. I had an entry here, but price failed to pick me. I'm going to show you. I was waiting to take a sell. See, this is where my entry was here, but they did not fill me in, right? Price did not come there. If not, I'd have been in on all of this amazing sell to the downside. So that's for card chef. And now the next one is going to be AUD CAD on the 1 hour time frame. July 24, AUD CAD 1 hour time frame. Let's go to AUD CAD on the 1 hour time frame. Okay, AUD CAD 1 hour time frame. Okay, so this is it here. All right. So AUD CAD 1 hour time frame. Now, I'm sure you might be surprised, like, oh my God, what is this? What is this thing I'm seeing on the screen? Don't worry, you're going to be learning more about this in the second phase you're moving to. This is what we call harmonic patterns in the market. It is an aspect of market geometry that we look at some numbers. If price do this and do this and do this, therefore price is going to do this. Okay, just predicting what's going to happen using mathematical numbers and the fib. So I projected price coming to this area and then price is going to reject from there. Now this D happens to be at an area of what? Structure. You can see we had supply, supply, supply. You can see this is a very strong level of what? Demand and supply. So if I draw it to the front now, I'm also looking to take a sell from what? Take a buy rather from the imbalance. You see the imbalance? The imbalance was from year to year, but price filled it up all the way down here, and then there's still a little left. So that is where I was looking to buy, and look at what happened. Let's look at this. This was where I believe. Okay, can you see? And then I was looking to take a buy from this imbalance. Exactly. And something like this. This was where my entry was. And my stop loss was just at this low down here. That was about a 25 pip. And look at the response price gave about a 125 before it rejected to the downside. So I can see precise entry played out well because I understand, I know my checklist and I just added demand and supply to it. So the last one we're going to be looking at is AUD NZD on a 1 hour time frame. AUD NZD on a 1 hour time frame. Come here, come to AUD NZD, and then we go to the 1 hour time frame. Okay, we're on the 1 hour time frame already. And yeah, this is it's in this area here. So now let's look at this now. This is a strong level of demand and supply. We had some demand in this area. We had some demand in this area. Drawing it all the way to the present, you can see we also had some demand in this area. Look at the response. Went up, came down, went up. So this is demand, demand, demand. Now, there is something you need to also know that is the same area that is once a demand could turn to a supply. That's it. So that same area where you have a strong demand can be a strong level of supply in a bearish market, which is what we have in this area here. This was a sell down. I wanted to take out this liquidity, but we also had internal liquidity. We have a structure, we have the range, the fib, institutional candle. There was an imbalance here. I can't remember what time frame it was. And then I wanted price to take out this liquidity, come into the imbalance, and then price should drop. And look at what happened. Price did that. Price took out the liquidity, came into that imbalance, and look at the response. Price took out this liquidity, and then price was rejected all the way to the upside. Price came into that demand and supply area also. So you can see that it is important to know and understand the concept of demand and supply and how to use them in the market. That's it. So now a quick homework exercise for you would be, this is your homework exercise. Okay, identify 3 areas of demand and supply in the charts. That's it. Identify 3 areas of demand and supply in the chat. So that is going to be it from me, guys. If you have any question, please feel free to head over to the question group and drop your question. Once I see it, I will attend to you. That's going to be all. Do have an amazing day. Bye-bye.